I do believe in the entrepreneurial type. Like, you have to be ready for the journey. But the next thing that I think many people fall into the trap of is they ask themselves the question, what do I need to know? And I think it's the wrong question to ask.
Okay.
You should be asking yourself, who do I need to know?
Who do I need to
It will
know?
be impossible for you as a practitioner to learn all the things you need to learn in order to take that jump.
You know, when I was building my company, it wasn't really until the last, probably 90, 120 days when I started to realize, what's my company actually worth? I had quit my job in corporate America less than 10 years earlier and was building a business, and it was cash flowing business, and EBITDA. It was like literally great, had awesome profit margins from a percentage standpoint. I owned 100% of the company. Life was beautiful. I'd mix and match my personal and my business account sometimes, and me and my accountant would just work it out at the end of the year. Okay, wait, John. This trip to Hawaii was on your business account. That wasn't what. Oh shit, I didn't do that on purpose. And then we'd audit everything ourselves, and but then I get a phone call from a private equity firm that is interested in my company, and I dismissed the call because, you see, in insurance brokerage, which is corporate insurance brokerage dealing with the bigger clients, I had looked into mergers and acquisitions in the past. And the rule of thumb in mergers and acquisitions back then was 1.5 to 2 times your gross revenue. And a strategic buyer would come in and buy your company. You'd roll into them. And yeah, it's a good deal for some at 1.5 to 2 times gross revenue. But the deal for me was I was at an 80% profit margin. I'm in my freaking 30s. Why the hell would I ever sell a company to a bigger competitor if, at 2 times gross, when I'm making an 80% profit margin? I might as well just not do shit for the next 2.5 years, keep the same amount of money. You know what I mean? Wait till all my clients freaking fire me. I mean, literally. So it wasn't until private equity, and I'm going to introduce our guest here in a second. You're going to see how this all lines up, but it wasn't until private equity got involved, and I took that phone call rather reluctantly, and I shared this in a previous podcast before, where this guy they must have used some marketing company that was trying to find potential acquisitions, and guy goes, "Come on, John, you got to eat. What's your favorite restaurant in Chicago? Come on." And I'm like, "Dude, you have been so freaking persistent." I go, "Fine, I'll meet this guy at Mastro Steakhouse." And I was kind of just doing it, not to be a dick, but I'm just like, all right, I like their martinis and their ribeyes. Let's go give them. At the time I was living at the Trump Tower in Chicago, and it's 2 blocks from my house. I couldn't have made this meeting more convenient for me. Well, of course, me and the guy end up hitting it off, and he starts telling me about multiples of EBITDA. And it was a lot more than 1 or 2 times. See, when you look at multiples of gross versus multiples of EBITDA, which is your net profit margin, your net profit or net earnings, that's who you talk to, and I don't know how you want to define that. It's a game changer. So instead of 2 times gross, let's say, I can't be specific, but let's say I'm going to give you closer to 10 times your EBITDA. And I'm looking at this guy. I go, okay, you guys are gonna do that? Bullshit, you are. You think you've backtracked some stuff and reverse engineered some shit, and you probably think you figured out what my gross book of business is, and you're probably sitting here thinking I'm operating at a 17% profit margin like everyone else, and we're gonna go through this exercise, and it's gonna be a big fat waste of time because you think you're making me a great deal, and I'm, chuckling, and now we've you kind of used car salesman to me, and where I've been in these conversations now with you for 4 weeks, so you've gotten me to be emotionally committed to get this offer that sucks. He assured me that is not the case, and EBITDA is EBITDA, and the multiple's the multiple, and all right, let's go down this path. But it just kind of makes me think back. And I ended up selling the company. I didn't hire an investment banker. I didn't hire a business coach. I didn't hire any advisors or experts. I honestly thought they were effing up. I'm like, these guys, they're going to pay me this much, these dumbasses. Like, okay, bye. And then once I got out of my NDA and was able to like, talk about it with some people, dude, every private equity firm would have bought you for that much. You could have probably had a bidding war between all of them. At the end of the day, I think me being naive ultimately helped me, because I ended up taking a big part of my deal in stock when I sold the company, and that stock was supposed to be a minority share ended up tripling twice with two recapitalization events and the 5-year employment contract I had, and it was just best timing ever. And I don't think I could have ended up in a better spot, even if somebody would have paid me a higher multiple. I wouldn't have benefited like I did from that stock. It really kind of like tripled my purchase price, in all honesty. But when I was looking at today's guest's bio, his name's Tim Calise, and I'll bring him on in a second. But the first thing he says on his webpage is, make your business better and more valuable than before you met me. That's my number one goal. As the strong number two behind multiple 7- and 8-figure CEOs, I have helped technology, services businesses, entrepreneurs build products, operational systems, and financial systems to increase sales and create lasting enterprise value for founders over 20 years. Now, I just think about that. I'm like, okay, so there was probably a more efficient way than having a guy work for me that was making 42 grand a year, and he just sat there 90% of the time, and the other 10% of the time he drove me around in a limo. Like there's probably a more efficient way of doing business. But when you're making X, 7 figures into it, and that 40 grand was a rounding error. It didn't matter, and I owned 100% of the company. Okay. But if I would have had a guy like Tim say to me, hey, buddy, it's not the 42 grand. When you sell this the next year, that 42 grand is going to be an expense. That's going to cost you probably closer to 400 grand, my friend. Oh, shit. If I would have had a guy like that in my ear telling me this shit, I'd be so rich I didn't have to do this podcast for free right now. I'm just kidding. You follow my drift, though. It would have been helpful. So I see Tim nodding his head. Tim Calise, welcome to 2000% Raise. Thanks for joining us.
Oh, thank you, John. Appreciate you having me. I'm looking forward to the conversation. So, and yes, we probably could have saved you $500,000 along the way. So,
well, hey, I just laid you one up there, man. I just laid you one up. Yeah, you'd have to go through the stuff and find some other shit too. Today's episode is brought to you in part by Glencrest Global. Glencrest Global is a Chicago and Los Angeles-based venture capital firm that is involved in interesting companies with interesting founders. To see some of Glencrest Global's investments, visit glencrestglobal.com. Tim, I got to tell you, I don't really tell that story that often that I just told there. And while I'm going through your bio, it just kind of like resonated with me, and especially your background. I like how you position yourself, that you've been the number two behind. Okay. Because one of the things I'm challenged with, at least, Tim, is people know I had a big exit, and I'm doing this podcast and some social media. I have a curriculum and stuff, but it's really more for just like kind of me helping the masses and stuff. If I turned around and started pushing something I was selling and stuff, well, wait a minute, dude. We know you sold your company to private equity. You did all this shit. Why you trying to, nickel and dime me for a few bucks? And it would ultimately perhaps make people question me to a degree. Mm-hmm. Are you full of shit by everything you did? Now, you, Tim, I don't know anything about your financial situation or anything else, but, you said you were the number two behind these founders and CEO types. So that would lead me to believe that maybe you never had that huge exit, but here you have this business coaching business. And I got to think that as the number two behind multiple people like that, gosh, that you could better serve clients than someone like myself, really.
Yeah, no, I appreciate that. And so I think our stories are actually somewhat similar. So I started in kind of the corporate world. I started in the kind of financial services industry at Salomon Smith Barney back when that even existed, prior to Citigroup. And then when I was 22, I basically was looking at this going, the career track here is I'm making, I think I was making $32,000 or something like that as a a runner effectively. And I'm like, God, I got to if I'm going to be a broker, I got to build a book of business. It's going to take me 5 years to kind of even get on the roadmap. And even at that
Were
point,
you on a trading floor?
no, I was in the wealth management space. So I was with two managing directors who were running very quietly a very large book of business. So I
Gotcha.
was answering. It was one of those typical, I would pick up the phone and this high net worth individual is on the other end of the line. And one day I was just like, what the hell am I doing? How do I get on the other end of the line? Like I want to be the
Yeah.
guy who's moving money around.
So that's
And
funny because
yeah,
when I hear runner, I think of the old Chicago Board of Trade people because
uh-huh.
I'm tall, so I would get
Yep.
recruited when I was younger. Dude, we need guys like you on the floor. Thank God I didn't do it because 2 years later everything was freaking web based anyway. That position didn't
Right.
exist. So what, you're talking about an actual runner? No, I was picking up phones and running down the hall, kissing every ass I needed to.
Yeah, being tall and loud was the name of the game in that business. So
Yep.
probably
Yep.
could have done well. And so I at that time kind of hedge funds were becoming a thing. It was that kind of the heyday of institutional investing was becoming more and more popular. And so I left at 22 the kind of career track of very defined progress forward. And I joined a guy who had just started a fund. He had about $250,000 of his own money that he had put aside. And I said, you know what? You keep running the portfolio. I'm going to build a business around you. And I knew at that point that kind of being in the right place at the right time and being entrepreneurial and enterprising, I went out and raised over $300 million over the next 2.5 years for this
Holy
fund.
crap! Wow.
So very similar
Wow.
to you, 24, 25, I was making six figures, the whole
Yeah.
9 yards.
Yeah.
And so having you mentioned I'm enamored with the idea of an 80% net margin business,
Yeah. I
at
saw
that
you
age.
smiling.
Yeah, I had something very similar. It was like, how the hell are you guys running $350 million in Birmingham, Alabama, of all places,
Yeah.
unlevered? And at that point, 2% of 350 million is a pretty
Yeah.
good number for
Yeah.
three people to share.
I was gonna say when you
And
have three employees, I was gonna say four. It's three. That's
yep,
hilarious. That's
yeah,
hilarious.
I think we grew to four towards the end out of a 900 square foot office. And so I think,
Yeah.
but that experience taught me kind of what the idea of structuring investments, the idea of, at the end of the day, life is all about arbitrage. It's kind of what do you put in and what do you get out? Some people call it leverage. That's a form of arbitrage, in my opinion. So I looked at that and said, kind of how do I take this experience? And at that time, it was kind of acquisition, consolidation. So you buy up a bunch of businesses and then hopefully sell them for a higher multiple. And that was kind of the first season of my life. The second one that was most impactful is I joined a guy that you and some of your listeners may know. His name is Alex Formosi at Gym Launch
Okay.
during that
Hey,
ascent. And
before I want to hear this about Alex, but I know once we get into Alex, we're probably going to get off of what you
yeah, we'll
just
go
said.
down there. Sure.
One thing you just said, Tim, which is really cool. You used the word arbitrage, and us non-financial people,
Yeah.
us non-M&A people, I never heard this damn word till I was selling my company. All right. And it was used to me in this context, Tim, and I think you just used it the same way, is, you know, the private equity backed competitor that bought my company, they were I'm going to just make up numbers, but say they're buying companies like mine at 8x, okay, 8 times EBITDA, all right? And they were doing a private equity roll up, and then they were going to turn around and sell all of us little guys as one huge guy for 12x, let's say, all right? Because a bigger private equity firm is going to be more interested in having this. They don't want to deal with us little shitheads and $30-40 million guys. They want to deal with $1 billion guys. You know what I mean? It was interesting because I'm like, wait a minute. If I'm taking my deal from you guys partially in stock, you're not diluting the other shareholders, because the day we sign that dotted line, that stock is worth more. So
Exactly.
Inherently, I just made money on this deal, and so did you guys by
Yep.
the second I sign it, the second you issue those stock is the same second that my business is now part of yours that you're going to sell for 12x that you just bought at 8x. holy shit, this is,
It's a
so the
50% return just by signing your name. There you go.
exactly. So
Yep.
but what I was really enamored with was the other side of that, on their side, that wait a minute, they don't even need to come up with this money, because then they also held a portion to make sure my business stayed on the books. So once you start looking at the math, it's wait a minute, we're going to buy you for, let's say, $30, John. We only got to come up with 15 though, because about 5 of that we're going to pay you with your own freaking money, by the way, of the business that you just brought, and then the other 10, it's going to be in stock. So it's
Right.
kind of, anyway. So I just wanted to share that
But
arbitrage.
I think arbitrage comes in, and leverage is a form of that. For the last kind of 30 to 40 years, leverage has been in the form primarily of money. So you borrow money. So think about just buying your house, right? You're making 100 grand a year. You want to buy a $750,000 house. You don't have 750 grand sitting around. So, you put up, 50 grand, 75,000, whatever it is. And what do you do with the rest? Take out a mortgage. So you're leveraging the bank's money in order to get an asset.
Okay.
Over time, you might pay, let's go back 2 years, you're paying 3% on your mortgage. Your interest rate was 3%, but your house appreciates. The value of your house goes up by 5%, 7%, 10% a year. You pay the bank a little bit, you gain the advantage, the benefit of owning your house that is increasing in price. This is the most common example that most of us can think about.
What you just described right there is considered arbitrage.
You are taking the cost of the bank's money at 3% and buying something that'll return 10 and keeping the 7.
Yep.
Think of it that way, right?
Yep.
That's arbitrage. Yep. You're basically using, and the most common example, again, over the last kind of 30, 40 years has been money. It's, I go and borrow money, or I do a roll up, something like that. It's really interesting because right now there's lots of forms of arbitrage now that we live in the kind of social media generation. You can, arbitrage the idea of like media. You can go out and you can buy Facebook ads. You can get on a show like this. You can take a picture with Gary Vee. You can, go attend a Grant Cardone event. You can, fill in the blank of whatever's in your industry. Having the associations with a billionaire in your industry and taking a picture with them, or getting a shout out or a like or something like that is arbitrage. Like, I right now can pull up my phone and call 3 billionaires. That is an asset.
Yeah. Okay.
It's not just money. My capital is my Rolodex, the money I can bring, the people I know, the experience I have. So I like to look at it and say, how do I take the things that are valuable that I have in my quote unquote in my portfolio and get a what I call an asymmetric or a above average return on those things. And if you really start to think about it as a business owner, you're like, okay, how the hell do I do that? Like, how do I reverse engineer the world around me, get ridiculous returns on investment? So like, how do I basically stack the deck in my favor? How do I make this work for me? And when you look around, you're like, holy shit, like I can do this everywhere. Hire somebody for $10 if they can produce $50 worth of value. That works. I can go use AI to replace, the person I was paying 50 grand for. I look at clients and I went from kind of looking at business structure to, how do I build these lasting cash flow businesses? And it's really amazing when you take that lens, because I think it's just a way of thinking that a lot of people are just not familiar with.
Dude, I love that, man. And you just nailed it too, metaphorically. Well, I guess it wasn't even a metaphor because it still is arbitrage, but your social media piece right there, man, that is huge. And I can't tell you, at least a few times a week, I'll get a DM from somebody just asking me to follow them. And then I'll go look at their freaking account. And it's private and they have barely any posts. I go, dude, why is this stranger asking me to follow them? And I stopped to do, I used to say, okay. And then I'm realizing because they're trying to do something with it, you know what I mean? And show somebody that I'm following them, whatever. And hopefully it was for something positive when I have accepted that. But on the other end of that shit though, bro, I do the exact same shit. Okay.
Sure.
A few years ago, I got involved in the investment group that bought the freaking Newport Beach Marriott. Okay, I was very lucky to
Mhm.
get in the same room with these guys. Somebody dropped out last minute. I had showed interest, but I wasn't really like the people in that room are billionaires. They own freaking sports teams and shit. You know what I mean? And this was a few years ago, and yeah, I mean, I'm well off. I don't own the Oklahoma City Thunder. Okay,
Oh yeah.
but
It's funny. One of those people that I was calling, that I was answering the
yeah,
phone when I was like a peon,
yep.
actually owns a sports team, which is really funny. He's actually one
Is
of the
that right?
well-known guys. That
Yeah,
if I said his
yeah.
name, you know who he is. It's like holy shit! Like
Well,
these, it. There's a game
but
to be played. So
you
go
know
ahead.
what though? It's so funny. So once I got in that damn deal, it's put me in the rooms with all these other people. A friend of mine, they own a huge liquor company that's been around for centuries that people would know, and it's anyhow. But that Newport Beach Marriott deal, all right. Whenever it's a slow day in social media land, you're gonna see me reshare a story about the because they reimagined it now as the Via Hotel.
Mhm.
I own just as much of it as any other freaking investor. Okay, it was a private investment. I'm not full of shit. Okay, but for every 4 months or so, you'll see that pop up on my Instagram story. Just cause, hey, have you checked out our new pool?
See, but it's paying dividends. It's
Yeah,
being in those rooms and having those relationships.
yeah,
Allows you to leverage those experiences and that past to maybe somebody sees that and like yeah we gotta call John because we're doing a deal in
yeah.
Vegas and John knows his shit. So
Well, and the thing is, right? It's true too. I'm not bullshitting versus the other example of a person saying, "Stranger, follow me," and whatever they're going to try to, use that for. But it kind of gets me to, the whole fake it, till you make it kind of
yeah,
thing. And in social media land, we see that all over the place, right? But how about in like the real world, man? You know what I
mhm,
mean? It's you got these younger guys, and they don't have to be younger. They could be in their 40s, they could be in their 50s, and it's like, dude, you haven't done shit. You're
yeah,
trying to play, big ball up here, and you're just not there. You don't need to be in those rooms, and you bullshitted your way into it somehow. But in my experience, this shit just doesn't work, man.
yeah. I don't think it does. I mean, you can play short term games with short term people, but that's not how you create kind of lasting value, right? So the whole kind of fake it till you make it means you're misrepresenting yourself in some case. Now, we all started somewhere. So I would say if you feel like you are trying to play a game that you are not prepared for, you really only have two options as far as I'm concerned. One is you start at the bottom and cut your teeth and earn your stripes. Like, you know, you have to have street cred in some of these things. And there's no harm in starting at the bottom, right? Or the other is, I pay coaches handsomely for two things. They kind of see around the corners and find the mistakes that I'm going to make before I even know what I'm doing, that I'm going to make them. And the second is they compress time. So if you are trying to play a game, you're like, I want to go do this, but you don't have experience, go find someone who's played the game before. And you're fake it. You might not have that experience, but you can learn from others that have been there before to at least give you the starting point. Like if I was to buy a restaurant right now, there are some primary things, there are some core tenets that you have to know about owning a restaurant. Like if you don't
Okay,
know how to manage your food cost,
right. Yep.
I can go and be like, technology, but now I'm going to go buy a restaurant. It's like, no, I need to go find someone who's like, let me tell you all the mistakes you're going to make.
Yep. Yep.
I can't fake that. The
Right.
money is money, and the failure will be, on the board. I'm not smart enough to know to kind of go outside myself. So,
What if they watched all of the episodes of Bar Rescue and feel like they're good to it?
it's like you just got to be, Jake Tapper, just walk in and just start yelling and
Exactly.
start firing people.
You know what's funny though? I guarantee you, there's people that have been lawyers or accountants that have quit their damn job to try to open a restaurant, and they freaking think they know their shit because they watched Bar Rescue, and maybe they're smart enough to figure it out. But holy shit, if you had someone holding your hand in the process, a lot of those mistakes, you know what I mean? I see people doing. I actually made a reel about this recently. Home flippers. Everyone's a freaking home flipper now, man,
Yeah,
because they watch freaking, flip it or buy it or list it or whatever all these shows are in HGTV and Bravo and shit. And it's like, dude, you guys don't know shit. Have
exactly right.
fun with that. They're not making shows about, and if you watch really closely, some shows do expose it, but you don't hear this on social media. Oh, I worked my ass off for 4 months and lost 12 grand. You don't hear about that
Right.
flip, you know?
Exactly. Yeah. I mean, I think for anyone who's trying to kind of do something, people ask me, especially, and John, you might have seen this. Like, once you have what they call a liquidity event, once you get some money, then you're like, okay, now I'm sitting on it. What do I do with it?
Yeah.
People probably know, you might know the name Wayne Huizenga. He owned the Miami Dolphins for a while. He's been in Southern Florida. He started waste management. Not a sexy
Yeah. So
business.
their family actually is in Chicago. I know that.
Oh,
I know
really?
them. Mhm. Yep.
Cool. So you probably know, like, he did multiple deals in the exact same industry. And when he was asked why he did it, he's like, well, fuck, like, it's the thing I know. So starting a business sounds risky unless you know what the fuck you're doing to some extent. So if anyone's trying to kind of like hang a shingle, it's like, well, what do you know? And to your analogy, it's like there are people that are making tons of money. They'll sell a company and then they go and start buying real estate, and it's like you don't know the first thing about real estate. Like that is higher risk than going out and funding companies if that's what you know how to do. Building software, whatever your niche is, whatever your jam is, like stick to
Yep.
that.
Yep.
So somebody actually, really simple was just like, well, how much do you know about fill in the blank? I know 80% of my time goes to building companies. Well, then don't buy a fucking stock. Don't buy crypto. I don't know the first thing about crypto. It's like, so I should be spending 80, I should put 80% of my investable assets in something I know.
Right.
And then I can put the
Right.
20% in like in the other stuff if I want to go dabble in something else. But risk is one of those things. It's like, it's not about the amount of money invested. It's about the amount of risk and units of risk that I'm taking. I'd rather write big checks in something I know than write small checks in something I don't.
I got to tell you, man. So when I had my exit, and then after I fulfilled my employment contract, I started Glencrest Global, which is my early stage venture capital firm. And a couple of things with this, though. People would ask me, you talk about being comfortable or uncomfortable. Okay, am I faking it to make it? I don't know. You want to accentuate things, and well, as soon as I started saying it's a VC, people just assumed it was like a fund with limited partners. So my lawyer
Mm-hmm.
tells me, dude, just tell people it's your family office. Just say that. I'm like,
That's the
well,
word.
yeah. I go, but here's the thing, bro. I'm not worth like Sam Walton, and I'm not, don't got all these billions of dollars. He goes, brother, and this is my lawyer. He goes, brother, I know exactly what you have. There's people with a fraction of what you have saying they have family offices. You're just fine, sir. You know what
Yeah.
I mean? So it's all about context, and then you bring up someone like Huizenga, and it's like,
Yeah.
okay, maybe I'll just say, oh. But where I was going with that, though, I kind of digressed there. Where I was going with that was I jump into this venture capital stuff. I made all my money on insurance, and gosh, man, those first 6 months, 6 to 12 months, I'm just operating like I know everything, not in a bad way. I'm operating where like I can trust you. You came to me with a good business idea. I funded this thing. Now you're gonna run with it. Well,
Yeah.
I didn't know shit about this space. Or I know in what space, what's venture capital, anything. I was in a bunch of shit. Here's what I fucking learned though, bro. I learned that not everybody's suitable to be a business operator. I go, dude, this is a great fucking idea. Like one business, I got so annoyed with this guy. I go, dude,
Yeah.
you fucking suck. I'm just gonna run this thing myself.
Mm-hmm. Yep.
And that wasn't the deal. I own 8% of the company, and I funded the whole thing, and I remember running it too. It seems a little
Yeah.
off there. But over time, then you learn. Okay, wait a minute. Everyone has these big eyes. They could do this shit, and then you really look at people's background. Not everyone's cut out for it, or they're not even willing to put in the damn work, man. And
Yeah.
you said something else I wanted to comment on. When I played football at Notre Dame. All right, there were double sessions going into freshman year. All right, we're in the cafeteria. All right, I'm just a freshman. I haven't played it down yet. All right. I go sit at the table with the starting quarterback and all the superstars you're seeing on TV, people on Sports Illustrated and shit. And I'm just thinking it's like anything else. It's like, you're not allowed to sit here yet, buddy.
Right.
you got to prove something. So you can make that, that analogy. It's like, okay, I'm going to watch them, see how they act, see what they do that got them there. I'm going to be around them as much as I can, but I'm not going to pretend I'm one of them until I'm actually one of them.
Yep.
You know what I mean?
Exactly. Yeah. And I think for people that are starting out, and I think we're going to see this, the pendulum's going to swing back. Right now, it's easy to make any claim because you can say anything to anyone in any of these channels. I think what we're going to see is there's going to be a lot more showing rather than telling. The people
Mm,
that are authentic, and this is what I'm switching all of my stuff to now, instead of saying, let me tell you about what I can do, I'm going to show you. I'm going to do more for me personally. I'm going to skew towards like doing more kind of online stuff, actually walking through case studies, because you can't fake that. And
yeah.
somebody might rip it off, but then you can ask one or two questions and poke holes in that really quick. So, the people that I'm talking to are like, it's less about telling, it's more about showing. If you are starting, start with that.
Yeah, yeah, and gosh, that you just nailed it, brother. I didn't know what we were going to talk about on this interview. I had a few ideas, but this is awesome that we're talking about this shit. I've had this happen in social media land, and people are so skeptical now. Okay, I have this reel with me walking through my house. You can kind of see the background of the house, and someone's like, "Oh, he rented that house, or he has a realtor friend. This guy's full of shit," that kind of stuff. And then I've had somebody else tell me something and then luckily for me, I have followers that actually know me, will stick up for me, and whatever. But like, I did this gambling one, and it was about staying in the villas at the Mirage. And this guy came at me like, dude, stay in the villa at the Mirage, blah, 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 blah. And then I just commented back because everyone could see it. And you have to gamble a certain amount of money to be there. It's not like that big of a feather in the cap. Anyone could go gamble a bunch of money. It doesn't mean you're rich. But based on how I responded to him, he knew immediately that I wasn't full of shit and actually commented that, okay, I stand corrected. This guy's legit. You know what I mean?
Yeah, exactly.
The proof comes in the pudding. The proof comes in the pudding. And it's so much, brother. I love the fact that you're doing coaching, because I started doing it too now. It's just getting rolled out, 2000%raised.com. But it's mine's more about preaching entrepreneurship and how you could leave corporate America to go be an entrepreneur, and what that transition looks like. And I kind of use my experience as a guide, and how it could work out for you, where what you're doing is more about scaling business and that kind of thing. But what we both have in common is that we both actually know this shit and we've done this shit.
Exactly.
I have this marketing company trying to get, like, really encouraging me to get out and do this, because I see my social media and I'm like, dude, I don't want to do it. I don't really necessarily need the money, and it's going to be a lot of freaking work. And they're like, think about it like this. Now, granted, they're getting freaking 15% of my profit, so they're buttering me up. But what they said to me, though, that did make sense, though, they said, bro, the people that have a thirst for this are getting inundated with a bunch of 28-year-olds pretending they're millionaires and taking pictures of the Lamborghinis, telling you that they're going to help you start a company. You actually have something you could offer them. So that's kind of what put me over the top to actually move forward with it.
Spot on. I think the world needs more of the authenticity, and the old saying of the tide's going to go out and we're going to find out who's wearing a bathing suit, and that's naturally just going to happen. That happens in every industry.
So with that, the first time I heard about Alex Hormozy was an internet troll commenting, telling me I'm an Alex Hormozy wannabe and to get a life. And I'm like, who's this Alex Hormozy guy? so I went and checked out his page, and I'm like, all right, this guy's pretty cool. That's what maybe I'm a wannabe. I didn't know I was, but maybe I am.
No, well, there are worse people to be compared to. So
Right.
even it's a good model to go after.
Yeah, yeah. But so I cut you off earlier. You were going to tell a story about what I don't know where you were going with that. What hormones?
Yeah, no. After kind of my investment management experience, I actually started a chain of gyms, technology enabled gyms. We built that to a 7-figure a year business. But through that experience, I got introduced to a company called Gym Launch. And most people now know the co-founder was a husband and wife team. The co-founder was Alex, and Alex has now gone on to many other things. But Alex recruited me to come join Gym Launch during its ascent. And for those that aren't familiar, that went from 0 to 35 million in revenue in less than 2 years. It was the
Wow.
fastest growing company in 2019 in the United States. And then we sold 2/3 basically of the business to a private equity firm about 15 months ago.
Wow.
American Pacific Group. So, but Alex has gone on and is a phenomenal business coach, and he now kind of helps $10 million businesses get to $100 million. my kind of sweet spot is a little on the smaller side, going from kind of one to three, 1 to 5, 1 to 10.
Okay.
That's where I like to play, and he's gone bigger. But that was just a phenomenal experience to join him, and I built a product. We built a technology inside of Gym Launch that we went from zero to about 1.5 million in monthly revenue within 4 months. So we built that project.
Did you have equity in that company, Tim?
I did.
Okay,
Yeah.
awesome. So then this is now. So that was only 15 months ago. So now,
Yeah.
Did you just start the coaching 15 months ago, or were you already doing this prior?
Yeah, I started in 20. I mean, I've been doing things, kind of throughout my career. Focused 100% of my time on Gym Launch while I was there, and our associated companies. But
Okay.
then starting in 2022 is when I really started to focus on kind of helping the next crop of business owners, entrepreneurs. I'm not a believer in the kind of hustle and grind culture. So a lot of my clients are parents. I have 3 kids myself. So the idea of just work 27 hours a day is not something I subscribe to. And so the people that I attract primarily are ones who are looking to get more out of the time that they spend. Kind of, so talk about leverage. How do I basically double, triple, quadruple, or more my cash flow without taking on undue risk, doing things that are crazy, or kind of giving up my life as I know it. So those are the people
Yeah.
I traditionally track.
We should talk. Well, we should talk offline, because I'm talking about startups and entrepreneurship. They should graduate from my course, and now you go to Tim's school.
Yeah, absolutely. Yeah, no, it's we should have that conversation. But
A little funnel.
I'm passionate about the kind of the idea and the process of kind of starting and building something. I'm not artistic in the traditional sense, but the idea of kind of, or the concept, taking something from a concept into reality is kind of my art, if you will.
I love it, man. I love it. And for those in the audience, one of the things I want to kind of highlight here, what's if you didn't catch it, all right, it's clear that Tim has a passion for what he's doing right now with the coaching. He obviously is well versed on what he's talking about. But, and I'm connecting some dots here, Tim, but I'm pretty sure I'm correct. 15 months ago, he had an exit of what he put his blood, sweat, and tears into. All right. Now, that's fine. He had some equity in that company, and it wasn't his company, but he had equity in it. It put him in a position now that he could do things like, you know what, I'm passionate about a coaching business. I'm going to go do this now. And clearly it was money from that exit that puts you in that kind of spot to do something like that. I was in a position, Tim, when I sold my company, where it was just like, okay, after my employment contract, then I have a 2-year non-compete. Okay, then I'll just wait those 2 years and get back into it. And, between LinkedIn and social media land, all the clients are keeping a finger on the pulse anyways. They know exactly where I'm at. You know what I mean? I had it on my damn calendar. Okay, this date, and this year, I'm able to go back into it. You know what, man? You got one life to live. You know what I mean? Did I want to go back into insurance? Even if I'm just going to do it, try to make some money with supplemental bullshit. I'm going to start diving into it, working 60, 70-hour weeks again, sell it to another private equity firm, and do another employment contract there. And boom, all of a sudden I'm in my mid-50s now, and life's behind me. You know what I mean? So I'm going to do some fun shit. I'm going to go into venture capital. I'm going to do this shit now. Probably $4 million I put out there in that first year that is either going to turn into 400 million or zero.
Well, welcome to venture capital. That's
exactly.
Right.
So definitely some learning lessons on the way there. But I gosh, it's just one of the things I talk about, Tim, is equity. You know what I mean? It's putting yourself on the top of that org chart, right, with 2,000% raise. Leaving corporate America in that job instead of waiting for your salary increase of 3%, 5% with cost of living adjustments. No, screw that. Give yourself a 2,000% raise over here. Put yourself on top of the org chart, and then build equity in yourself. Because guys, when you sell a company, all right, holy shit, that's the game changer, man. That's the game changer. And if you don't have the entrepreneurial mindset where you don't want to build, but you want to be a part of a big organization, find a way to get equity in that organization. You know what I mean? It ain't going to happen at a company that's been around for 50 years. So I don't give a shit what you get your title up to. Oh, they're going to give you stock options. for a publicly traded company, who gives a fuck? Like literally, who gives a fuck?
Point zero 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 something percent. Yeah.
Exactly. I worked at Arthur J. Gallagher at one point, and they had this stock program, employee purchase program or something. It was like, we get a 15% discount. This is years ago. I might be misstating this thing, but we get a 15%, and they're publicly traded. We get a 15% discount, and you do it through payroll deduction. That's cool, but it's like, you're not getting rich, bro. And we're limited to how much we could buy anyways. You know what I mean? If you're at a startup or some kind of emerging company, and you have some kind of substantial role, like a systems guy like Tim, and hey, I'm not talking about you, Tim, but let's just say that, hey, I'm an operating officer type of guy. I command probably 225 grand salary in the industry working at Kraft Foods. Okay. Well, you know what, man, we're a fucking startup. We're going to give you 140, but we're going to give you this equity, and we hope to have an equity in 5 years. That's how you get freaking rich.
Yeah, spot on. And I think there's so many, we live in a world now where your ability to find people whose problems you can solve has never been easier. So let's just say you're that process person, you're working at Kraft, you're making 200 grand. I believe the world is going to start to reward systematic thinking, because I think right now, just kind of where we are, nobody can think anymore. So if you can say, all right, when I look at my day and look at what I do, where do I start? What is the actual activity, and what is the result? So, so take that systems person. I know how to take the idea of a new product. I know how to do a go-to-market strategy. I know how to define, kind of carve out our piece of the world, and I know how to communicate that well internally to our team, and I know how to write some copy. Let's just say that that's your job. If you take that and say, okay, I'm a big believer even on the power of, kind of the idea of a power of one, company of one. I have a couple of VAs that support me, but I basically do this on my own. So my margins are 95% plus on anything that I do, because it's all service. And if I was to ever sell it, I have a process. I already have SOPs. I have all that stuff. I have VAs that will support me, and I'll get 8 to 10 times whatever I make every year. So even I just don't want people to be afraid of this idea of like, well, I have to go out and take all this risk. Like, start to document what you're doing. Call it, I'll even give you the cheat code, the 2 or 3 words, and add framework at the end.
Okay.
The go to market, packaged food, go to market, GTM framework, and just say, this is all I do. I take a physical product, I define how it's supposed to work in the market, and I put a plan around that. If you pay me $49, $497, $5,000, whatever it is, start low and work your way up, and just sell the fucking piece of paper.
Yep.
Let's just say, for sake of example, you find 100 people to pay you $5 grand. Congratulations, you have just built a million, a 7-figure business.
Yep.
It's not hard. I should say it's not complicated. And I think the idea of, and that's most of what I do, and you'll actually see it on the stuff that I put out on Instagram and LinkedIn. It's about addition by subtraction. It's not doing more and making it complicated. It's like, what is the one thing that I can do better than anyone else? Make it very specific and digestible and simple to execute. And as long as there's a market for it, you will do well. If you can do that nights and weekends to start, if you're the like risk averse type, I don't want to leave my job, I like what I'm doing. That business alone, if you can just get it to do, $10,000 a month free and clear, you're making 120 grand a year. And as you spoke to earlier, John, that business is now worth 500, 600, 700 grand to somebody else.
Yep.
There's your asset. And you can do that today. So I'm a big believer in kind of, you just got to start somewhere.
Yeah, I love that, man. I love that, and I got, you said something there too that got my wheels spinning a little bit. Okay, what am I good at? What's my system? All right, but then you're going to turn around and sell it. And what's interesting is when you're playing with high profit margins, like Tim's talking about too here, right? It's like people think they need all this capital. If you're a service sector job, I always talk about the best salespeople for service centers, say like Accenture or a company like that, where the product is human capital. Once those high performers, those top performers, they're also the ones selling, they're also the ones doing the servicing, and they're the go-to person. They've become the product. They're selling themselves, literally. What do you need the organization for? Well, they're paying me $500,000. Dude, what are you bringing in, bro?
That means you're making them 5 million. So
Exactly.
whether they tell you or not, yeah.
Yeah. Like literally take a step back. What are you, what's happening at the organization beyond you that the client gives a shit about that you can't do yourself? And ask yourself that question. And now, if there's a laundry list of stuff, you ain't there. And it might happen. I've had this conversation a bunch of times with lawyer friends of mine. I have some friends that are the bigger, like Kirkland and Ellis's, Sidley Austin types of places. And we've been talking about this since they were 30, because all these Chicago lawyers walking around when you work at a firm like that. You know how they know it? You know how you know they work at a firm like that? Because they'll freaking tell you they work at a firm like that, okay? But they're some of my best friends, and I was talking about this entrepreneurship way back then, and they're like, "Oh, it just doesn't work." I'm working on United Airlines. If I start Jim and Mike's, legal firm, you know what I mean? Even if I give it a better name than that, United Airlines ain't going to use us as a client. Okay, whatever. But you can make those arguments here and there, but you don't need United Airlines as a client. You know what I mean? To replace your income, you need a bunch of these littler guys down here. And that's exactly what I did, man. When I left Arthur J. Gallagher, no, well, you're going to be working with the corporate accounts. You're going to be working on our freaking nail salons and barbershops. No one's going to hire you. You think any bigger employer is going to hire you? Yes, I do. Whether they're going to come to John Cerasani Insurance? No, they're going to come to Northwest Comprehensive. That's what I'm going to name it. They're going to come to your house. You don't even have an office. No, but I have a UPS store mailbox, and you know what? I'm going to go visit them at their office. They're not going to give a shit where my office is. You know what I mean? So there's ways to do it if you want to do it, right, Tim?
I mean, at Gym Launch, we were doing close to 50 million a year top line. We didn't have an office.
Is that right? There you go.
Are you ready for this? We didn't have a website.
What?
30 million.
Wow.
There was nothing. There was no gymlaunch.com. What we did is we just ran landing pages to sell the shit out of what we were really good at.
Wow. That's awesome.
ClickFunnels, we were one of the first two companies, or probably one of the largest for ClickFunnels, because we were doing such high volume. But you said something which is spot on. I think there really are two types of. I do believe in the entrepreneurial type. Like, you have to be ready for the journey. But the next thing that I think many people fall into the trap of is they ask themselves the question, what do I need to know? And I think it's the wrong question to ask.
Okay.
You should be asking yourself, who do I need to know?
Who do I need to know?
It will be impossible for you as a practitioner to learn all the things you need to learn in order to take that jump. Because imagine if you're sitting in the office going, I'd love to do this on my own, but now I have to learn, and here's 17 pages of disciplines that I don't know what I'm doing. If you took those and go, okay, I don't know anything about finance. Somebody has to pay the bills and stuff. Who do I know? Who do I need to know to satisfy that? Well, there's fractional CFOs. Just you can find one. You could throw a stone and probably hit one. Bookkeepers, whatever. Okay, what else do I need to know? I don't know how to do online advertising. You can throw a stone and find someone to do. So I would encourage you to the not overcomplicated piece is, how many things can I remove? How many impediments can I remove to taking the step? And maybe you can't go it alone. Maybe you got to find someone else who's a partner ultimately, but start fucking somewhere.
Yep.
You'd be shocked at how straightforward some of these things are. And if you're going, I want to break out, but I have no idea what to do, find someone like myself. And John, even to someone like you, like, hey, I want to break out. What do I need to know? What are the 3 things that I could screw up that's going to make me fail? Okay, I can tell you what they are. So, there are people out there that genuinely want to help folks like that. And I think the assets, the resources are there. But if you can think of who's, not what's, you will go a lot further, a lot faster.
Wow, great! And I love that. Thanks, man. I'm picking up some stuff today. That very seldom, Tim, do I walk away with gems for myself. I'm usually the gem giver, not the gem receiver, buddy. But between what you just said right there and the whole arbitrage, or I'm going to arbitrage my social media. The way you're going to
You
see,
should.
I might make a reel about this shit. I might make a reel about, yeah. John, why do you keep posting that picture of you and Aaron Rodgers every 2 days?
That's
Because
mm-hmm.
Tim told me to arbitrage. That
That's
is
right.
why I'm. We're going to wrap up here in a second, but one thing I also wanted to kind of finish a point we were kind of getting at before. If you do everything on your company, some of you might be asking yourselves, all right, if I build a company and it's just me and I have this high profit margin, why would anyone want to buy my company one day? And Tim talked about putting protocols in place, and it's a system that you built that somebody could take over. And I would also say that in my industry, okay, so insurance brokerage was all relationships, very similar to like real estate. Okay, we don't us insurance folks don't like that comparison. We can more in the space I was in corporate insurance. It's more of like the consulting end, like a Price Waterhouse or somebody like that. It would be more comparable than real estate, because we're dealing with employers and CFOs and employee benefits, buying decisions, risk management, that kind of shit. But it's still you're the capital doing it. So why would somebody want to buy you? And what they do in our industry, in that industry at least, which is like many others, you got to work there. And it's not, oh, well, yeah, they're going to keep you on as a consultant because you own the business and you got to be, as a consultant for 12 months. No, you got to actually work there as an employee, and they're withholding some of the purchase price. And for me, I had to stick around for 5 freaking years. It's a long time. Well, why would they do that? Because they want to institutionalize the business. All right, we're going to pay you this whole ton of money, and then over the next 5 years, you're going to slowly get out of the picture. And by the time you're gone, you don't matter anymore to those clients. It's institutionalized. That's their perfect world and how that works. Now, in reality, it doesn't always work that way, and they get screwed, or something happens where, a guy like me in that position, not me, but a guy like me in that position, after year 2, he's like, oh shit, you're telling me how to, and he quits his job and he says, screw, keep the last 25% you were supposed to give me. I ain't doing another day of this shit. The clients all leave, and then the M&A guys or the private equity firm, like, oh, but shit, that deal didn't work out how we planned. So they put a lot of incentives in place to make sure that nobody does walk out that door and it does work exactly as planned. And they call it the golden. I wouldn't even call it the golden handcuffs. I call it the legal contract handcuffs.
Yeah, they're not always as golden, but you bring up something exactly right, and it's one of the first things that I do, because a number of my clients, their goal is to sell their business in the next couple of years. And if you think about, put yourself in the shoes of the acquiring company, the person doing the buying, they want to minimize their risk. So your 5-year employment agreement minimize the chances of the business falling apart, of the clients that knew because I know John. He's the lead, head of the company. Don't worry, we're buying it, but John's not going anywhere. That's risk reduction for them.
Got
It's
it.
you doing something competitive. That's not being able to do that. That's
Yep.
reducing their risk. So if you're thinking about building something to sell, my personal belief is you have to have high profit margins, because that gives you the ability to backfill yourself. So in the beginning, you're going to do a lot of the work, and you're going to have your hands on a lot of different things. A great guy that I know, his name is Dan Martell. He just wrote a book called Buy Back Your Time. If this is in your alley, go pick up Dan's book. It's phenomenal. And it's about, so let's just take myself, I have 90% plus profit margins. If I was to build a big sellable business, I would go and say, okay, I need someone else to stop doing the thing. I need to stop doing the things that are not highest value. And I need to get this business to run without me. Right now, it cannot run without me. I'm also the brand. So at some point, like, you were smart. Like right now, my name is on the masthead. I would rename my company something that doesn't involve my name. Because then when somebody buys it, it's like, oh, you're just buying, whatever the company name is, not Tim Calise, as an example. So this was one of the things we did at Gym Launch. Gym Launch was synonymous with Alex. And now Alex, he's a board member of the company, but he has no operating role at this point. He is
Gotcha.
not the business. And it was one of the things we needed to do was to separate the man from the company, because it is a risk that the acquiring company would take if he was not there. So we had to build the systems, we had to build the brand identity, things like that. It usually takes a year or two to be able to solve a lot of these problems. So that's why if you have that thought, work backwards about 24 to 36 months, because you can solve all of these problems.
Yeah, that's awesome, man. I had getting back to the company name. That's great insight what you just said about Gym Launch, by the way. And so I was part of this private equity roll-up strategy, and they're buying us, and we're relatively small, or the company buying us was relatively small when I got in. That's why they've had 3 different private equity firms since now, because they keep growing up to different levels and the returns are there. But so when I came on, you got to change your name to that company. All right. So my company was Northwest Comprehensive. It's now no longer Northwest Comprehensive. It was like a 3 months transitional period. Now we're their company. I don't want to say the name of their company, but let's call it ABC Insurance. Now I am ABC Insurance. I'm using ABC Insurance letterhead, blah, 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 blah. Well, over time, the private equity space got so damn competitive that the acquirees, the companies selling out, it was so competitive because it had all these bankers and everyone else shopping them around. No, F you, I'm keeping my name for the first 5 years and blah, 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 blah. So you got these early guys with like me at this company. I'm a team player. Let's get behind this. Yay. And no, it's a freaking Northwest Comprehensive. My branding was good as anyone else's, man. Northwest Comprehensive's gone. Okay. But you got 7 months later, some other company coming in that's freaking smaller than mine was, way smaller. And they're now XYZ Insurance, an ABC company, really small underneath. Where I'm already only ABC company. I'm not Northwestern Comprehensive, an ABC company, but they're XYZ, right, an ABC company. It's like, shut up, dude. You know what I mean?
Yeah.
So anyway, I just got kind of pissed off when I just said that. Right. Me getting pissed off about things like that, by the way, is over time. Over time, why that 5-year employment contract, especially the second half, I'm like, dude, get me the hell out of here.
That's quite common. So exactly right. Exactly right.
Well, listen, man, you've been awesome. Let's. I have a final question I'm going to ask you, but we're going to put this in the show notes. But why don't you go ahead and tell everyone how to get in touch with you? Maybe start with your Instagram.
Yeah, absolutely. On Instagram, tim.calise, so tim.calise. DM me 2000, and I will give anyone who mentions that a special gift. So I will give every one of your listeners. So DM me on Instagram 2000, okay, and I will reach out to you personally and give you a special gift for being associated with John. So on Instagram, and my website is timcalise.com, timcalise.com. Get on my newsletter. I send tons of these little jewels out. So go to timcalise.com and just put your email in there. I don't sell it or anything like that. It's to help the next kind of crop of entrepreneurs go kick ass. So I'd love to have you as a part of it.
Awesome. And Tim and I came across each other through some other people rather randomly. A lot of times, Tim, on my podcast, I know the people personally, but I had not talked before the show, but we do have a lot of synergies, and I'm going to subscribe to your newsletter myself, my friend.
Please do. Please do. I appreciate it.
So Tim, we've had everything from the founder to Goodfellas to Darren Rovell said, the frick, I forgot the name of it. It was like the company or the story about the guy that made the windshield wiper. Darren Rovell's kind of a weird guy. I'm just kidding, Darren, if you're listening.
I've known Darren for a long time.
Oh, have you? Okay.
Yeah.
He's trying to be different. He goes, this movie about the founder of, or the guy who patented the windshield wiper. Okay, Darren, cool. Me and Darren went to Northwestern together, so he knows I could give him a hard time. And I doubt he's listening. But all right. But Tim Calise, what movie do you recommend to the 2000% Raised audience?
Well, my favorite 2 movies that I was raised on were Caddyshack, and Animal House.
Oh,
everyone knows. But if you like kind of the finance side, Margin Call, if you haven't seen it, is a great entertaining movie. And Founder, which is about Ray Kroc, who founded basically created what we know as McDonald's today from the McDonald brothers. So those would be the ones that I would kind of top of mind for me right now.
Yeah, the founder is great. I just actually had my 14-year-old son. I had him watch that with me the other night, and it like literally about a week ago. You know what's hilarious about you? For Caddyshack's been said before. By the way, we had a guy that started sub 70 golf. Jason Hyland said Caddyshack. But Jeremy Roenick, the hockey player,
Oh,
was
yeah.
he was on the show once, and for some reason, at the end of the show, we start quoting like planes, trains, and automobiles, and like airplane, and all this shit.
Yeah.
And he said something about the movie Slapshot, you know, the hockey movie.
Oh, yes.
Bro, I tried to frickin' end it with like a quote from Animal House saying it wasn't over when the Germans bombed Pearl Harbor.
Pearl Harbor.
Yeah, dude. But Jeremy wasn't familiar with Animal. I thought I just figured he was. He didn't know what the hell I was talking about, and I screwed it up. I said it wasn't over until the Japanese bombed Pearl Harbor. Jeremy's looking at me like, what's wrong with this guy?
0.0.
What is it? Yeah, he's on a roll. Go with it. Honestly, bro, I had to post. I usually don't post production edit much, but I post production edited that one out.
I love it. I love it.
Awkward last 18 seconds. All right, everybody, thanks for tuning in. Tim, hang on the line. Thank you, Tim Calise.
Appreciate it. Thanks, John.
And that wraps up another episode of 2000% Raise. Thank you for listening. The best way to support our show is by leaving a rating or review on all platforms you listened on. And of course, by following, liking, or subscribing. Visit us at 2000percentraise.com or at John Cerasani on TikTok and Instagram. And of course, my YouTube channel at John Cerasani's 2000% Raise. Find all the ways to follow today's guests in our show notes. Thank you for being a part of our entrepreneurial journey.